The last 24 hours brought quite a lot of problems to the world. Iran missiles and, of course, dock strikes. But on top of all of this, we've seen sell-offs in some of the major indices. And this has many people concerned about whether Uptober has been cancelled. Well, one thing's for sure. On this channel, we talked together about the idea that dark pool liquidity was already leaning in on a move such as this. And in today's video, we'll break down how Wall Street was one step ahead of the news once again. Also, big breakouts in the US dollar and oil. Could we now be looking at new setups that are just coming in? Well, today we'll talk about all of that and more as we cover stocks, commodities, and cryptos for the weeks moving forward in what is sure to be one of the most important months of 2024. See you in a moment. This will be a good one. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we need to talk about this huge red candle because, of course, yes, the market started to show volatility into the most volatile month of the year during elections, October. Now, we know based on several different reads, including dark pool liquidity and options, that we were already expecting this. In fact, the day trade that was actually present over the last 24 hours was exceptionally good for the sellers. And we suggested and talked about this concept when we were looking at the potential on the markets during our live analysis streams that we do every single open during the week in our private community. Links in the description down below. Now, why is this so important? Well, let's take a look at the bullish percent index. One of our favorite index reads is showing us now that we're above 80. And we actually got this at the end of last week. And we, of course, reported on it hitting 78 just before the end, and how that can often show us what we call a pullback in time or a correction style zone. Some other very popular style terms as well. The McClellan Summation Index is also showing us an extreme overbought symbol here, along with fear and greed entering into the greed signal, all during the period of what now is being deemed as October. Now, I know October is actually due to crypto, and we'll talk more about that later because it could have been a big shakeout over the last 24 hours on crypto. But markets do look a little overbought right now. Here's another good read taken from Seth Golden, and it's something we've shared on the show before in terms of this idea, which is percentage away from moving averages. If you move over 5% away from the 50 moving average and over 10% away from the 200-day moving average, then that tends to kind of line up over at least the last 2 years with very specific periods that have all ended in corrections or pullbacks in time. That is a sideways market burning time through the market itself. So that's where we find ourselves right now. And of course, it leads into, well, should we be terrified about a bigger sell, or should we be looking at possibly buying the dip, buying fear if it does come back into the markets? Well, with a 1% sell-off on the S&P or around that level, it makes us realize that October could already be telling us a lot about the 3-month structure. In fact, if we sell off on the first day of the month, which was, of course, October, we've only ever seen that 11 times in most of the history here back into the 1950s. And what this actually showed us was that we have a 100% strike record over the Q4. So basically, the fourth quarter is going to generally be bullish across the board, even with a day sell-off in October. It's only one of the reads along with these other ones that we need to discuss right now. FundStrat's Tom Lee basically has come out with some data saying the next 3 months and 6 months, if we're in a no landing style situation, so a non-recessionary situation, 100% of the time should be showing a bullish style section in terms of that quarter. And we also know that this is a good sign in the bulls when we have 8 of the first 9 months overall showing bullishness. Of course, the big one there was the close in September, which led on to now us knowing that if we follow what history would tell us, 100% of the time we should be up over the quarter. So what this is showing, along with the gaps up from the 50 basis points and all the other data that we've had on the show over the last couple of weeks, is that we probably don't want to be right now terrified about the medium term, that is the next 1 to 3 months. Instead, we should be looking at opportunities in this market when it goes into FOMO stages to see corrections which freak everybody out. And of course, we may have just seen the catalyst from that, which really to me is actually dark pool liquidity. But of course, it could be the dock strike, or it could be now the escalation of tensions in the Middle East. Let's talk about no landing versus hard landing scenarios. Of course, we know the next 1 to 3 months from a structure perspective may tell us about the next 9 months as well. And we've argued this for a while. Follow what the market's actually telling us to do versus what your opinion with limited data and more importantly, narratives, which are usually wrong, that you shouldn't be paying attention to. So here is the no landing style scenario. The markets, of course, continue to bull up and have some of the best return periods over the next 12 months. This hard landing scenario, which we do believe we'll eventually go into, which is the recession, is very different. So the recession basically starts and lags along, starts to sell off, and then can get very, very nasty indeed. Now, there are some reads that people will be looking for this week, which could change a lot of the game, especially from what the Federal Reserve's doing, and that will be the non-farm payrolls. And you'll see here the JP Morgan's non-farm payroll scenarios are basically showing here that most people are expecting between 140,000 and 160,000 jobs. Now, in terms of what this kind of is showing from their perspective, they believe that if we get between these rates, we'll see 75 basis points to 1.25%. In terms of gains on the S&P, that we'll see 1 to 1.5% if we get between 160 and 200K. And of course, if we get too strong a number, then the markets may not like it. So there's a lot of interesting reads here depending on how the jobs numbers come in. We've always found that these are usually wrong, but instead what you're better off doing is actually following the setups ahead of non-farm payrolls. Remember that our motto here on the channel is patience, react, don't predict. This is something that we really want to do around non-farm payroll, especially if we're day traders. So before we go into the charts and we look at the S&P 500 and the dark pool liquidity, I just want to quickly talk about China again. Obviously, bull markets are born on pessimism. Here on the channel, we've been talking about this for about 9 months, and we've discussed the idea that we thought China was coming out of a massive black hole. And of course, they've been in a huge recession. You can see it here on the charts, absolutely brutal, one of the worst that's been recorded in terms of just overall market cap loss size. That seems to have changed. Why? Because they bought the bazookas, they bought the big dollars, and of course, people are getting squeezed massively, being caught off guard by this. I'd like to think that everyone here on the channel hasn't been caught off guard by this, and a lot of people have been sending some very interesting messages showing that they have been paying attention and making their own correct decisions. So well done to people out there. Now, we know that everyone was short. We know this is pushing, of course, and squeezing, and it's continuing to do so. But if we take a look here, the advanced decline line blitzed, and I mean absolutely went ballistic. This shows you an overall massive pattern towards growth. And this is basically showing us that this is probably the low. The last times we saw this, of course, when we started talking about it a lot at the beginning of the year, and also when we see these types of advanced decline lines, that tends to mark the beginning of a bigger, wider bull run. So a lot of people have been asking, where does it stop? Well, it could have a little bit more legs in it, but do remember the volatility will continue to be a huge deal. And also remember the PBOC hasn't done enough. So have they increased the GDP of the country with their stimulus package? Yes, we know that 40 basis points is expected. However, they're going to have to continue down the line. And what they've basically done here is they've said to the market, we will keep doing it. And what the market's going to do is they're going to say, where is it? We're going to sell off until you give it to us. And this will be the cat and mouse game played now over the next 6 to 9 months at least. Now let's talk about Bitcoin. Now this is going to be a bit of a sore subject because of course for a lot of people they were expecting October. That is, it just goes up throughout October and everything's all great. Well, we obviously saw no catalysts on the day trading change when we were looking at the last 24 hours. And this again shows why you need to have a plan, you need to instigate it correctly. Now for hodlers, would they be concerned about this? I don't really think so. The big four central bank balance sheets are clearly on the rise. That's a good overall long-term kind of aspect here for Bitcoin. I wouldn't really change my sentiment or survey reports based on that. A lot of other people are going to say, well, if September was bullish and ended up positive, not 0.79 down, this obviously hasn't been updated, then October, November, and December should be bullish, and why are we down for one day? This is why traders lose money. A lot of us have impulsive-based decisions, and instead of looking at the overall picture of what the data is really telling you, you look at just one day and say, oh, well, I knew it's gone, October cancelled, and you can already see based on the start of today's video that the memes are coming out with people already doubting it. This is that good old-fashioned shakeout, and we'll look at it very, very soon. But do remember, October is historically bullish for Bitcoin. Yes, a lot of people know about it. Possibly now, it will have to wait till November or December. It's possible that that would happen. But as we always say, look for the flows, look for the movements. And I think the last couple of weeks have already shown that things are starting to improve. So even though they're sold off a little bit, I don't think it's time to panic just yet. Let's talk about, though, the dark pool liquidity, because Wall Street was well ahead of the market on this sell, and possibly there could be still a little bit more further selling to come. Remember, we generally will hit the 50-day moving average, and we'll show you where that is very, very soon. And basically that's because markets like to pull back to some form of mean reversion. Generally it's the 20 weekly, which actually lines up pretty well with the 50 daily. Now, the Qs, big transactions. We've already shown several of these, but I want to just quickly walk through this one because this helped us to make a decision that basically showed us that more than likely the bears were sitting on the previous session to ready to sell. In fact, the price action went like this, and as it went through this level, it became a pretty clear sell, I believe, for day traders on that particular session. Of course, the market went down and did a pretty nice job. Now, this is actually like a 3 or even 4 to 1 day trade move if you have the correct stop losses and you know what you're doing. When you wait for your edge, when you wait for the market to actually show you a very solid sign of movement, you can make very good money out of markets. And of course, it's all about risk management and all the boring things that most people don't want to do. But this was a very particular line. And you can see here that someone made a big move at that point, and this ended up being basically the supply or the resistance. Effectively, whoever entered their position, and most likely was a short round here. And it could also mean that these are also shorts leading on to a correction down to something like that 50-day moving average, which we'll talk about in a moment. Another cool chart here from Duality Research, I just kind of had a look here and I like this one, is looking at the different markets around the world and seeing the winners and seeing the losers. Now, of course, when we look at the Asian markets over here, you might think, what is 2359? Well, of course, they use numbers versus the codes that we do in the West, but I just love these numbers. 7013 or 2359, it sounds like something wild. You can see here that there are quite a lot of moves in the Hang Seng towards, of course, extreme bullishness. We can also see here the winners in terms of the different markets around the world. So if you like these types of charts, I'd like to bring them to you a little bit more. It shows you also a bit of the worldwide markets from the perspective of what's really been doing well and poorly. And maybe there's some names here that you're not familiar with on either side that you could start to look at on the charts. Let's now talk about rotation. It was a great day for energy and energy stocks. We already thought energy was starting to look a little bit basey. Well, then it did it. Gold stocks also came back. That's, of course, because of the tensions. And then we had utilities, one of our favorite sectors, continuing to power forward. Regional banks did not like the session at all, along with semiconductors. And that brings us to a 5-day average now of utilities doing the best, energy now coming out, and of course, regional banks being the lowest. We will have to keep watching those regional banks very closely because if it gets too bad, that can be, of course, a very negative sign for the economies. S&P 500, though, we knew that there was most likely some form of sell coming. Now the question becomes, is it going to get worse? We've talked about 5,600 being a key level and possibly even lower than that. So let's just jump over to this chart. And what I've done here is I've put a 50-day moving average on, which also is sitting on an anchored VWAP around 55.50. Now it looks like a fairly decent level for the market to get back down to in a wick form because, of course, around here or even a gap fill would be significant in terms of markets actually showing some form of consolidation. Now, if we actually took that distance, that would be about 4%, which is pretty much in line with the standard little mini correction. We've already had the big one that you would usually expect during a year, which is over here. And of course, if you measured that out, that's 9.71. Really, that's 1, 2. Usually that's all you expect in terms of the bigger ones, and the rest are usually much smaller. So could we get to 55.50 or 5,600? I think the stats and the likelihood start to stack up a little bit more here. And of course, if we look at the futures market action, this 57.48 was where really the market went, I'm going to sell off at this point. You'll also notice that now the options high levels and lows have been updated. And the low for today seems to be around 56.49. So that may be an interesting zone for bears if they're looking at TPing. And of course, 5,600, 56.20 seems like the most logical conclusion. But the markets have changed in structure. And I don't really think it's the structure of the S&P that's the most important here. We know where the key levels would be, 55.50 or 5,600, 56.20. They're going to be the two main zones that we expect the markets to pull back down to. But it's going to come back to the flows on the dollar and on, of course, oil. So let's have a look at the S&P from positive gamma to potentially negative gamma. If we clear underneath 5,700 and hold down for the day, you can see here that gamma has turned to the negative side. We can also see that that goes through till the 3rd of October as well, with 56.55 becoming a huge put wall level. So certainly something to be looking at. And then if we keep going, we can actually see that now we're going towards 55.10 on the OPEX of October. So that is the main expiration of options. So there are a lot of signs here saying that negative gamma could start to take over in this market, especially if conflict starts to go up, and that's used as the excuse to sell off in markets. Remember, this is usually an excuse. Yes, it's terrible, and of course it's not good. And the strike stuff is costing, what, 5 billion a day or something like that. But ultimately, markets can absorb most of this information. We've seen conflicts arise many, many times before, and the narratives are really what ends up playing out here. Instead, we should be looking at the flows and what they've been doing. And we've already suggested that maybe these flows have been pushing towards the negative side now for around a week. Let's take a look at Brent. We would have to expect CTAs have absolutely gone ballistic on buying this. These are delayed data points, so of course we will see that. And if we go over to Tesla, we had some struggles around, of course, the 260 zone. This is one of the only stocks still in positive gamma. Remember, the 10-10 event is a very strong magnet for this stock. So if we continue to hold up, 270 is the next level, and 280, of course, is where we expect the market to potentially want to go. So Tesla is in its own little bubble, which is different from something like NVDA, which is feeling the brunt of the market sell-off. You'll notice here that 115 is now the massive call put wall this week. And of course, that's going to be where you've got that temporary strength, or even possibly, as you can see here, the 110, 112 area. So anywhere between 110 and 115 is kind of where you have to expect NVIDIA to try to find some buyers. And we're certainly in more of a neutralized market at this stage. Let's move over now to some of the other market conditions. Of course, we discussed the idea of uranium in the previous video, and that seems to be getting a little bit of traction from the perspective of CEOs and also basically the Democrats and the Republicans in potential wanting to push this to win the AI race. Certainly something we are watching, but another one we want to be looking at here is XLY versus XLP, which is of course our consumer discretionary versus staples. Still quite strong across the board. You'll notice here that we're still in that sideways action since July of 23, and that suggests that the market is currently still in kind of like a sideways kind of line. Now, if we have a look at high yield bonds, you'll notice they dropped a little bit over the last 24 hours, but still in a very bullish overall path. And that's important because if high yield junk is still buying up overall and still in a bullish trend, that's suggesting that markets are prepared to take risk. Now, let's look at the short-term issues. The dollar index just did something that we haven't seen now for what, 400 or something like 4 or 5 cents. And that is break through the daily 20 moving average. And this is suggesting that this is a temp low, that we're going to push towards the 101, 180 kind of area. And then, of course, we have broken through a significant resistance line going all the way down. Also breaking through, not that this is the proper line, but you can see here the trend lines have been breached as well towards the upside. So some pretty strong stuff going on here in the dollar. If we break down the structure, we already kind of suspected it might have been coming the last 24 hours. And then, of course, this blitz through that area. It suggests that pullbacks to things such as these lines down here, about 150, could be met by bull demand. I saw a few people liking that one. Copper's still flying high for now. I still think it's in consolidation, thanks to, of course, China strength. And if you look here at iron ore, still very, very strong. And this just shows you the stimulus and the turnaround story in China is probably real and significant. We've already proven that with the advanced decline line. This is a great sign for the reinflation trade and for metals. And metals are significantly underpriced when you look at where they've been in the last couple of years. Gold, on the other hand, is more an economic instability kind of hedge in some ways. We still feel, even though we're massive gold bulls to 3,000, 3,600 even possibly, that this is a point of consolidation. So I'm still looking for a better buy price if we are to get new positions in. But gold did kind of hold its own over the last 24 hours. Silver didn't hold as well, but it certainly is still in consolidation. So we'll keep updating those when they're interesting to do so. Let's look at oil though, because oil had a significant change of trend. And I love this downward trend line. I also see a lot of people poo-pooing oil big time and saying, oh, well, you know, it's trash or it hasn't turned or it hasn't done any of these things. It looks a lot better than it did for a long time. The downward trend line is significant. The change of trend, of course, is starting to appear here on the smaller time frames. We took out the day trade buy level. We basically stopped out a lot of people on the lows here unless they had the more conservative stop loss. There were some buys in here that I think weren't too bad. So if you didn't have the stop loss under here and you had more of the aggressive stop loss, this would have wiped you out. And this suggests now that pullbacks, especially down into lines like maybe about 68.40 area, could be met by bull demand. This is the first sign, along with that other little signal we had the other day towards the bull into this level, that things are starting to heat up for oil. And you might say, well, of course, it makes sense with the tensions, but at the same time, we've seen sometimes the market go up into the tensions, then sell off, even though the tensions escalate. This to me is a pure price action based storyline. We blitz through 72, kind of 72.20, then that's going to be a significant change of trend, which could really get the oils trade started. So what an important level. The first signs here of significant strength. And of course, day traders may already be starting to scale in their positions, looking for further breakouts on whatever the news might be. Very key critical resistance formed. You can see here Tesla showing signs of resistance again, gets through. We actually want a 264 daily close. We get that. I think market's going to really start to improve. So that's going to be a key thing here. NVDA, we already know 110 to 115 is kind of where you've got to expect the market to potentially find buyers. At this point, it's in accumulation. We know we're not on a breakout phase because this downward trend line is quite strong, similar to oil. So we'll continue to watch NVIDIA closely. There's no real significant levels there. Let's have a look though at China. This thing just keeps absolutely blitzing. Now to me, this is kind of a very important level, 22,400. I'd have to expect it to take a bit of a breather here, but this is why you don't short against a short squeeze because things can get very extreme. And people that are holding this, wow, you must be pretty happy. This is absolutely blitzing. And it just shows you again, when you are able to look through and see something that other people can't see based on price action, it's got nothing to do with the narratives or the news. Look at the rewards that can be had. A very large move. Of course, now I would not be jumping in on it, that's for sure. But I would certainly be focused in heavily on the next couple of months to see whether there's significant opportunities. Oz 200, you'll notice that's still bullish, so the Australian market's still finding a series of higher highs and higher lows, and the US 2K keeps selling off. So maybe it comes down to 2148. Obviously, at this point, the S&P 500 has the strongest level, which is probably the 50-day moving average for now, which is something you should be popping on your charts based on historical averages of what we've seen. If we break out, then of course things will change and we remain adaptive when we have to be. That's what we do here on the channel, and obviously it's great to have you on board. Let's now talk about NASDAQ. NASDAQ, of course, sold a bit more aggressively, came into the first support. Maybe there's a temporary buyer here, but it seems more than likely we're going to go towards 19,400. That's a significant level for the NASDAQ, and it could line up well with the overall thought process on the S&P. So yeah, the S&P is probably the best chart again to make your assessments off. Now we move over to Bitcoin. Not quite to the largest trade volume. You can see we came off this green line here. We're finding some buyers, but this was one of those things where you have to have, really good trade systems. And if you think about it, we talk about likely hold zone. I'm not going to take it off because that's where I thought it was likely to hold. And you can see here it came down, make a series of lower lows and lower highs. Then it went up and it hit the first sign of strength. Now, did it breach through? No. If it had, would I have scaled in? Yeah. And I would have put a stop loss below here. And that's the essence of trading. You've recognized a key level. It wasn't able to get through it. If it got through here, would I have scaled more in? Yes, I would have. Because it was showing that V-shaped momentum that we like. We want to buy the V, not the dip. So in this case, this is what saves you. And then ultimately it comes down further. Now for a hodler, should you really be concerned? Well, let's go to the higher timeframes and have a look here. Have we changed trend towards the downside from the temporary small upside tick? You could argue going under these lows has started to make big problems here around 64,000. That's certainly true. You could also say that it's sitting at higher low. Maybe that's a higher low, so therefore we've broken through. You could say your weekly looks okay still. So basically, if you look at the weekly, it still looks like it's upticking. So overall, I think that the structure hasn't been absolutely totally destroyed or anything. This is certainly where I'd like to see buyers recommence, and this has changed people from having an Uptober attitude to a Downtober attitude, and just took, guess what, one day. It's not hard to turn people's sentiment, even though you really shouldn't be totally negative or anything against markets. This will now be where the sellers are, though. In this area here, if the market rallies up, which I'd expect it to, this will be where someone will try to sell it back down. If it blitzes these levels, that is a really, really strong sign for the bulls. I'm super excited for Bitcoin still into the next couple of months, regardless of what anybody wants to say about it, because of course, at this stage, we know it's very important. Most of the news is going to be focused this week on all of these external kind of factors that are in the macro. But remember, we have ISM Services PMI on Thursday, ADP non-farm, don't worry about that one. The big one here is the non-farm on Friday, which is at 8:30 New York time. and that's going to be the one that most people are watching. If you enjoyed today's video, guys, then please remember to subscribe, smash that like button, and of course, if you're interested in finding out more about replication and how to make the right decisions on markets, then make sure to check out our flash sale at this stage. Thanks so much for watching. Good luck out there, and there could be a bit more volatility to come in what we're going to call Voltober. See you for now. Bye.